Hey everyone, Raul Jimenez here with the Schrader Group. I'm here with Miguel Rosinski from Veterans United, and we're going to talk a little bit about the VA, Military City, USA. So what got you into Veterans United?
Well, first, Raul, thanks for having me on today. I retired from the U.S. Navy back in 2018. I did 20 years. I retired.
20 years?
Yeah.
Wow.
Yeah, I retired as a senior chief petty officer. I didn't know what I wanted to be when I grew up. I had a friend, associate type, that was already here in San Antonio. That when I decided to move here, he asked me to, hey, have you ever thought about working for Veterans United? I didn't know what Veterans United was. And as soon as I looked into it, I saw that they had core values that matched what I was used to in the Navy.
Right.
And seeing that we were so passionate about veterans, I knew that when I retired from the military, I still wanted to keep working with veterans.
Well, I mean, Military City, USA, right? So we probably do about 30 to 40% with the military. Who would typically qualify for a VA loan?
So there's a lot of different categories in regards to who would qualify for a VA loan. Active duty personnel that are serving right now, as soon as they've completed 90 days.
90 days.
Yeah, 90 days of active duty service after their basic training, typically the VA will issue out their certificate of eligibility. We always leave the eligibility portion to the VA, and we have veterans come to us, and it's part of our process to look in to make sure that they already have one. If they don't have a certificate of eligibility, then we'll file an application on their behalf electronically. So we typically hear back from the VA in about 1 to 3 days. So that's your active duty personnel. Veterans that have done their time, right, typically will also be issued a certificate of eligibility. If they haven't, we'll get a copy of their DD-214.
Okay.
Right, which is it's their golden ticket.
Oh,
it's
absolutely.
the proof of
the
I
Willy
did
Wonka
it.
bar, right?
Yeah, it's like I got it. I did my time, and then we send that in, and the VA makes a determination based on character of service and length of service. So there are times that you will run into veterans who didn't serve long enough, where they didn't have a high quality discharge. When they left the service, they may not be eligible. And then really our last category is reserves and guards. So if they've done active duty time and they've been activated underneath Title 10 orders, they'll be eligible. Otherwise, if they're just doing their normal guard time, they need about 6 years.
Wow.
Yeah. So they have to complete their service first as being in the reserves or the guard, and then we'll submit an application on their behalf.
And you could help facilitate a lot of that for them.
That's what I really love about working with Veterans United is that we're really big on just being that middleman, right? Because I'm not the one that's going to say you don't qualify or you're not eligible for a VA loan, right? It's my job that after somebody has a VA eligibility, how much do you qualify for a VA loan?
Right.
So I like being that middleman to help them, guide them through the process. We could send them to the website, who to talk to go get the right documentation. Maybe they have to speak with their current commanding officer, right? They might be just underneath that 90 days and they need a statement of service because the VA is tracking, but sometimes certain things fall through the cracks. We come in and we help plug those holes and make sure people they know about their entitlement.
So we all know there's conventional, FHA, USDA, whatever it might be, but VA has a special kind of, trait to it, the fact that, money down, right?
Yeah, me personally, I think that the VA is the best loan product for any first-time home buyer, right? Because first-time home buyers on all other loan products, with the exception of USDA, you have to put some kind of money down. Fannie Mae, Freddie Mac, they've done a great job in rolling out like these first-time home buyer programs where they have to put 3%, but VA is still 0 down, 0 PMI. It's backed by the VA, so you're going to have a government-based rate. So the benefits of FHA, where you're getting a lower rate than conventional by only putting a small percentage down.
Still stuck with PMI.
Yeah, exactly. But VA, you don't have that,
right?
And you have the lower interest rate.
So with the VA loan, are there any property restrictions?
So there can be. VA actually has tried to make it so veterans can use their home on a lot of different things. They can buy a condo, they can buy single family, attached, detached, manufactured home, modular home, right? As long as the home is tied to land, then they typically can buy it. Obviously, you have the appraisal process to make sure that the VA will back the loan up to what it's worth. But then the other thing that people always, it's kind of a myth. They're like, oh, VA loans are harder than other ones because of the property restrictions.
Right.
The reality is the VA is concerned about three things.
Okay.
Right? They call it the 3 S's of the VA appraisal.
Okay.
Right? Is the home safe?
Safe.
Right? Is the home sanitary? And is it structurally sound?
Okay.
Right? A VA appraiser, that appraiser is going to do what all other appraisers do. Like the VA appraiser is an appraiser for conventional loans, FHA loans. They do them all. It's just they happen to be certified by the VA to be able to also do these. And so they also, in addition to appraisal value, they have to make sure that the home meets what's called minimum property requirements.
Right.
Okay. And those are, you can find that. You can Google VA NPR, and you'll get to Chapter 12 of the VA handbook, and it'll list all of these things. It's pretty robust, but it's not so specific on every single thing. The reality is most VA appraisals don't have any repairs required,
right,
and they meet value just like anything else, right? The myth is that like, well, I should have went conventional because then the home would have been worth more.
Okay.
Not true.
So with that myth right there, most people are like, well, sometimes VA takes forever to close, and maybe it's better to go another alternative, but that's not true.
It's not true. Our branch on average probably has clear to close approval in about 20 to 24 days. The long pole in the tent for any VA loan is the appraisal. Okay, and every state has its own turnaround time for the VA appraisal report. And so that turnaround time starts when the appraiser is assigned. And typically with us, that appraiser is not assigned until we place the order for the VA. Depending on the option period, that's when we like to give the veteran space to say, hey, finish your option period. Then after that, we'll order the appraisal. And in the state of Texas, VA appraisals take 10 business days to turn around. It could be sooner. It could take the full 10 days. Sometimes it takes longer than 10 days. But that's specifically because of the appraiser.
Right.
And things happen, life happens, appraisers get sick,
of course.
People have family emergencies, things like that. So we have a good relationship where we're able to communicate with the appraiser and say, like, what is the status, what is the update? If somebody waits to order the appraisal at the very last minute, then 10 business days is 2 weeks. So we're basically up to that point, and then we need about 4 days for CTC, closing, signing, funding, all of that stuff on the back end. In most cases, within 30 days.
But then, so pretty standard with the conventional FHA, as long as everything's in line, and you'll ensure that everything's running the right way.
And there are some caveats, right? So if you take a look at like manufactured homes are a lot more challenging to close. You have to HUD tag, certified foundation. There's all these different requirements, and every lender has an overlay for that. I always recommend 45 days
for one modular. What is the maximum borrowing capacity, or what can a vet have as far as their entitlement here?
With Veterans United, the sky's the limit, really. I mean, so it's $2 million that if a veteran has cleared VA entitlement, then they can go past the county loan limit, still zero down. That changed back in 2019, what was called the Blue Water Navy bill. And so it's pretty amazing because I remember standing in front of a group of agents, and I was like, did you know, as of October 1st, or it was December 1st, I think, of 2019, veterans are no longer limited by the county loan limit, right? The conforming loan limit of, I think at that time was like 428 or 426. And I think right away, I had like 3 veterans in the next 6 months buy $1 million homes, zero down, and interest rate was 4.5, 4 point something back then.
So then why do they have the county limits if you can exceed?
So what happens is it changes the lending standard, right? Or the lending requirement. Everything below the county loan limit is called a conforming limit, right? Fannie Mae, Freddie, they set this conforming limit. Everything above that is considered a jumbo in VA terms and a non-conforming in other terms, right? And then FHA has its own whole, limit. But basically for veterans, that becomes the line that if they have clear entitlement, they can go above that line, zero down. But if they own a home already, if they already own a VA loan, let's just say they were stationed up in Killeen, right, and they're getting stationed down here, and they bought a house for $200,000, then that's when they get limited by that county loan amount, and anything above that, they have to put 25% of the difference as a down payment.
Kind of like a jumbo kind of situation.
Yeah. Right.
Being that military city, USA, there's a lot of military people that are dual vets or dual entitlements.
Right.
How would you say that that would work with trying to get your entitlements? I mean, is it smart to do it on one side to utilize that to have the other one freed up, or go mutual? What would you think on that?
That's a really good question. And it all depends. So let's just say you have 2 active duty or 2 veteran couples, right? Or 2 veteran buyers. They're married, they want to use their benefits. Well, if one already has entitlement, right, that they're using, and the other one's free and clear,
Right.
I'd recommend using the other one.
Okay.
Right, specifically because the VA does have a funding fee associated
Right.
with their loan, and if they're not exempt because of a disability or having being awarded the Purple Heart, then the funding fee goes up on
Does
that
it?
second use. Yes,
Ah.
it's what's great about the funding fee is it gets rolled in.
Sure. Back
But still, if you have a veteran that has clear entitlement, I would use the other one first. Again, whoever becomes the primary or the main borrower, their credit and income and everything has to qualify. You can't have somebody that doesn't qualify and like, well, we're going to use their entitlement. We'll basically help them make a decision as to which one to use. Now, in the event that they both have entitlement being used, right, then we'll likely do what's called split entitlement. You can split the entitlement between the 2 borrowers, right? You have to meet certain minimum loan amounts and everything with the VA, but we help with situations like that all the time.
So speaking of that, another myth that people have is you can only have one house on a VA loan or through the entitlement, but that's obviously not true.
It's not. I've seen 4 homes on somebody's VA entitlement before. And so what's great about like conforming county loan limits is they seem to go up every year, right? So it's like every year you get a little bit more buying power, okay? And so the reason the VA allowed this is they know, especially with active duty personnel, that if you buy a home in California, right, and then in the military PCSU, right, permanent change of station, they move you to another place, that you may not have the time to sell that home right away.
Right.
So you shouldn't be penalized by not being able to use your benefit again. Granted, you have enough remaining entitlement. What you can't necessarily do is like, well, I just got here, I'm stationed at Lackland, I'm gonna buy a home, I moved in 3 months later, I'm gonna go buy another one. So the VA does have a time limit that basically, and it's kind of a time limit that affects almost all primary mortgage situations, is occupancy.
Right.
A lender expects that you're going to live in that home for about a year. After a year, you can choose to buy again, but it will be scrutinized.
Right.
It'll be scrutinized. If you wanted to buy a house and then all of a sudden a year later you wanted to buy a house just down the street, you have to have a pretty good reason for why you want to do that.
So then that leads me to the next question. Can the VA entitlement be used for rental properties?
Not specifically for rental properties.
Okay.
Can't use it and say, I'm going to use this for an investment property. What you can do is, if you have a VA loan and you buy another one, you are allowed to rent that other one out.
The first one.
All right.
What about this? Can they buy a duplex and live on one side and rent out the other side?
They can do that. They can do that as long as it all makes sense, right? If they don't have a history of a landlord, if that duplex is occupied and there's already a tenant, they can't use that income as qualifying. They have to be able to. But if they have a history of being a landlord, right? They've rented out places in the past and they decide to do that, then we could start being able to offset some of that mortgage and start being able to use some of that income.
So this is one that just popped up on me the other day. Detached, right? Let's say mother-in-law suite in the back, detached garage conversion, and then a front house. The vet would have to take the front house, right? Because that's the primary, and they can't do the other way around, right?
Right. Yeah. Or sometimes you'll buy a property where like they say this is the main house, but then there's another dwelling structure, and that one's far bigger and far nicer, and they're like, we know what's going on here. So.
And what about this? So sometimes we get that opportunity to do a recast. Maybe you come in and fall into some money, and you want to pay down your note. Can you do a recast on a VA?
Unfortunately, you can't. VA doesn't allow recasting. Really, your only other option there, especially, and I know which situation you're talking about, right? So you have somebody who's waiting, they buy the house, they didn't sell the other one, right? They got all that money, and then they're like, I want to put it down. And I said, hey, well, if you make a large payment, it doesn't recast, it doesn't change your monthly payment. What I would recommend, especially right now, is if rates do get a little bit lower, wait until your loan is seasoned enough, and when it's time to refinance, put the money down on the refi.
And your Veterans United, y'all offer the refinancing options for them? Are y'all reaching out to the vets like, hey, you just purchased with us at, I don't know, I'm gonna make up a number, 6.5%, and then all of a sudden it drops to 5.5%. Do y'all reach out and say, hey, right now's an opportune time?
We do. What I really love about our company is that they have invested a lot of time and assets into software and marketing and things like that. So all of our clients, when they first apply for a loan, everything's done through a little secure portal called MyVU, My Veterans United. And even after they close, they can still make their payments in there. There's a calculator that shows, hey, if I put this much more towards principal, I'm gonna save this much more in interest. Right, I'll pay off the loan this much faster. But there's also something that we just introduced a few months ago called the lower rate radar, which is if we're still servicing the loan, as long as it meets seasoning requirements, because the loan has to season, and the lower rate is available, and it saves you at least a minimum amount of money, okay, and the rate drops at a minimum amount, then they'll get an alert, and they're like, hey, you're eligible for refinance, like reach out to your loan officer. And so that happened at the beginning of the year. We had that time where at the end of December, early January, where rates kind of dipped a little bit, and so we were able to.
They teased us at the end. They dipped a little bit, and they came right back.
They did, and all of my loan officers, we personally track in our internal systems when people are coming up, when their loan's ready to be seasoned, and it's just for us to look in, and we'll often text or email our borrowers and say, hey, it's been 7 months. It doesn't look like it's a good time to refinance, but we're going to continue to follow up, because when the time comes, we want to be able to offer that to y'all.
Okay, so the biggest question, where do they find you, Miguel? How can they get more information? How can they look you up?
Yeah, well, you can Google me, right? Miguel Rosinski, or you can go to www.vumiguelrosinski.com. I have an amazing team. Our products teams, everything is all integrated, so we can be able to reach out and solve a lot of problems. My branch specifically, we specialize in the difficult, like the geo batch, PCS, bad credit, limited on assets. We are problem solvers, and we want to be able to go in and help them navigate their way into home ownership, because it really is the American dream, especially for veterans. I firmly believe that if you had to defend this land, then you should have the opportunity to own a piece of it.
Yeah, 100%. Well, thank you very much, Miguel Rosinski with Veterans United. For more information, feel free to reach out, look at his website, or follow the numbers on the thread here. If not, we look forward to seeing you guys. Have a blessed day, and we'll talk to y'all soon.